Good evening, everyone. It's 6 o'clock. We'll go ahead and start the agenda tonight. First thing is consider approving the minutes held on October 23rd.
I make a motion, we approve the minutes and sign the warrant.
Second.
Motion made second. All in favor? Next thing on the agenda, just want to skip over just 1 second and we'll get right to the gentleman from the American Legion. Item number 4, to sign the game of chance letter from the American Legion.
I make a motion, we approve that game of chance again this year.
Second.
Motion made second. All in favor? That was quick. Thank you. You want to stay? You're more than welcome.
Oh, I think I will leave on that.
Yeah, see how you are?
I did got one thing to add. The VFW property is going back on your tax rolls.
Wow.
Down the other end of town.
No, no.
The building is shot, and we put up for sale about 5 months ago, and we've had a few bids on it, and we finally accepted one bid, and the sale should go through sometime before Thanksgiving.
So what are they gonna do with the property?
Some individual, I guess some of his relatives lived out behind there.
I see.
Oh, yep.
Jake Stevens. family.
Jason
Stevens family, I think.
Stevens bought it.
Good.
Well, not yet, but
Good.
he will own it.
Thank you.
Perfect.
Have
I'll
a good
see
day.
Sue tomorrow.
Yep, good, thanks.
Now we'll move back to the audit presentation. Thank you.
Good, yeah, you're welcome. Good evening. First of all, I apologize, you guys didn't get these too far in advance as I anticipated, but we got this out a little bit earlier than last year, so presented a tighter time frame in between. I'm gonna, as I've done in the past, I'm gonna go over the highlights in the report, not every part of it, and then you can ask questions. So we had an unmodified opinion, just a clean opinion. In addition to that, I didn't have any findings or comments. The only thing I would add that did not make it, that has been a verbal discussion between Doug and I, is just the continuance with working on establishing procedures and policies written in place for finance functions and things, and I've discussed that in the past as well. And
Could I interrupt, Chuck?
yeah.
And I have continued to work on that and have more in place, and my new backup person has done quite a bit of that for the payroll, accounts payable, so we're much further along even than we were a year ago.
Yep. So if you want to get right to the heart of the audit report, you can go to page 13. The first part of that is the first few pages are the pages that Doug prepares, and it's required management discussion and analysis. Kind of gives a nice overview of the finances as well. So it's good to look over that part as also. Page 13 and 14, this is the government-wide financial statements. This presents your assets of the town as well as the liabilities, whereas the other statements do not, and you don't budget in this way. So these are not budget presentation schedules. So you're going to see what comes down to what's called a net position. You have a net position, which is net investment in capital assets, which is those assets tied up as capitalized with offsetting liabilities associated with those assets. And then you have your restricted fund balances and then your unrestricted fund balances that are not in relation to the fund balances that I'll discuss later. Because they're very different numbers here. The only one that's very similar is the business type activities column. That's your sewer fund. So that is similar to the other schedules, because this is presenting the town's finances on it as if it was a business. And page 14 is presenting your expenses in a different way, which shows offsetting revenues that could be associated with those expenses. And coming down to a net column there under governmental activities after taking out some of the revenues that could be used against those expenses. And then you come down again to to the total net position of that 10,104,000, and then your sewer fund of 6,198,000. So these are full accrual financial statements in this, for these. On the next page, page 15, this is back to the traditional way of reporting by funds. So you have two funds here, the general fund and the capital projects fund. The general fund balances come down to a total of $3,190,000. $1,330,000 of that is tied up in your committed balances, and you can find those on page 35, the breakdown of those. So how those ended up at June 30, 2019. And then you have unassigned or unrestricted fund balance of $1,409,087. And then your capital projects fund is carrying $2,320,316. Any questions on that so far? You can skip over to page 17. And this is how the fund balances get there to those same totals based on the revenues and expenditures. Coming down to those same totals. I'll go over those more detail on another schedule, which is the budget versus actual, which again is your final numbers after audit adjustments or any other adjustments discovered since 2019. Page 19, statement 5. This is how your sewer fund ended up. Again, coming down to that net position in the sewer fund of $6,198,000, with $278,000 of that as unrestricted. And on page 20, shows how we got there. You'll see a change in net position of a loss of $123,685 for the sewer fund. However, $181,000 of that is depreciating assets contributing to that loss. So without that, you have a positive increase to the sewer fund.
Is depreciation handled differently in a municipal budget than it is in a business budget?
It is not for the sewer fund. It is for the regular operating fund. So the only difference being those first two statements I went over, those are depreciating like a business would, as if your town has depreciating assets. So those first two statements show your fixed assets just like a business would. So,
Okay.
but not everything else, because you don't budget depreciation. So you don't budget for that expense, and so it doesn't flow through the regular operating accounts in that way. Sewer fund does.
The sewer fund does?
Sewer fund does. Sewer fund stays as if.
So in the non-sewer fund part of the budget then?
Right.
It's depreciated differently. What's the benefit to the town of knowing what its depreciated value is on fire trucks and buildings?
Yeah, the idea behind it is kind of like a planning tool. It's kind of like to see where your net position is after debt service, it's to look at it as a business, in a business sense, to see that you've got this, a capitalized asset value of so many $1 million.
So you see somewhere in here that the change in the value of the property that the town has whatever kind of property.
Yes.
And if it goes down $200,000 in a year, if you were running it like a business, you would try to sock away 200,000 to then be able to replace that truck or building.
Which is your reserves. So towns and cities do reserves for that purpose, so it's kind of like set aside for replacement reserves, yeah.
All right, thanks.
Yep. I'm gonna just skip through your footnotes, 24. Through 40. Those give you a lot more detail on those balance sheet account items and liability, all the breakdown in more detail of those accounts. Also, your fixed assets that you just brought up, your debts, your debt service, totals, amounts of payouts in more detail, and any other and equity balances as well that are broken down through those pages. And this is a part that keeps getting longer and longer each year. Page 41. How we get there to your ending fund balances in your general fund of the year. You can look at your budget versus actual after any all adjustments that have been posted and made. At the final budget column, the revenue side, you had $11,515,000 budgeted to take in. You actually took in $11,734,000, so you had a positive overall increase of $419,508 over your anticipated revenues. Down under the expenditures, the final budget was $11,824,562. You actually spent $11,235,000, so you underspent by $588,646, both positives, coming down to a positive amount of $1,008,158. And that, so, but on the actual side, you have a positive in that middle of that column. You see the $498,652. That's what actually gets added back into your fund balance. And then you take out a transfer of $140,000 that goes into your capital projects fund to come down to a net increase overall of $358,652 to bring you to your total fund balances of $3,190,534. And as I pointed out on the other pages, that's not all unrestricted fund balance. You got that, a lot of that tied up in committed and assigned balances. So overall, a positive year, increasing fund balance, and pretty good shape overall going forward with the amount that you have in your fund balances and the amounts you have set aside. So those are the highlights there.
Doug, how much did we take out of fund balance for this year's budget? A couple $100,000, was it?
Yes.
And so you put 358 back in? That's
Yeah,
pretty
so yes, we have built it up, and so, when we look at the next year's budget, I think we'll be able to increase it a little bit and use it a little bit more.
Any further questions, comments? Nothing from no one. Thank you for your time. Job well done. Next thing is on the agenda is a vote approving third-party request subcommittee.
We actually had our first meeting tonight, so we're a little bit for the horse. I think I sent out a straw poll. No, that was on the All I need is an approval, motion and approval on the third-party request, and actually Don will probably speak to that.
Buzz, this question?
Yeah, I have a question. In this sheet, my name's on there. I was
You
replaced
got
by
the
Nolan.
uncorrected one, that actually.
But just so you know.
It's Mike Perkins
Yes,
instead of Harold. Don, you want to talk about this a little bit?
Do you want to approve the committee first?
Either way. Yeah.
Why don't you approve the committee, and then I'll tell them what the committee did.
Make a motion to approve the committee as listed.
Motion's made, second, all in favor?
So the committee met prior to this meeting to basically look at mostly the process. We pretty much stayed away. There were some comments made about amounts and that, but that was really just a side bar to it. We've played with the process over the years. We've changed it. After talking about some of the rationale for redefining how we do it, let me tell you what the final recommendation is. Kelly, who is one of our members, came up with an idea that she has used in the past, which electronically requests information from all the third parties. And from the sounds of things, it's a fairly simple, straightforward process, but she can gather information from each of the nonprofits online. Email them a link to a format that they can fill in their name, the contact information, the name of the organization, a description of what that organization does for the residents of our town, how many people in our town participate in the activities, what the costs are to the people. So some of the things that we have asked in the past, and we get these tremendously large folders of information from some of them with national information, state information. It sort of overwhelms us with how much material we need to look at.